Good morning. Stocks are edging lower on Friday as investors wait for a consumer sentiment report, and they also remain pretty jittery about the ongoing budget negotiations in Washington. Lawmakers must agree to an emergency budget deal by Monday in order to allow key federal government services to continue running through December 15th. From the start of the new fiscal year in October, it's estimated that a U.S. government shutdown could reduce economic growth in the fourth quarter by up to 1.4 percentage points. Penney's is selling at a deeper discount this morning after the retailer had said it was going to begin offering 96.9 million shares to raise funds for general corporate purposes. Now, Penney's expects to end the year with about $1.3 billion in cash, excluding the proceeds from a share offering. They were quoted as saying, taking into account the net proceeds from this offering, the company's expected year-end liquidity is anticipated to increase by the amount of such net proceeds. Penney said this in a regulatory filing on Friday. Now, the company has not disclosed the price at which it plans to sell the shares, and of course, there's a lot of hope that people are actually going to buy them. On Thursday, Nike announced after the market closed that its quarterly earnings would meet or beat the analyst estimates in both revenues and profits. The company continues to outperform, and the growth story is far from over. Nike generated $6.97 billion in revenues and 86 cents per share in net income. The revenues are up 8% compared to the same quarter a year ago. Analysts were looking for Nike to report only 78 cents a share in earnings, so the company beat that number pretty easily. Nike's quarterly income represents a 37% increase compared to the same quarter of last year. Blackberry, well, no big surprise here. They reported a huge quarterly loss this morning, days after accepting its largest shareholders' tentative $4.7 billion bid to take it out of the public eye. Blackberry had warned of the loss, and they said their net loss for the second quarter was $965 million, or $1.84 a share, on sharply reduced revenue of $1.6 billion. The loss included a pre-tax non-cash charge against inventory and supply commitments of about $934 million. And that's what's happening before the opening bell. I'm Deborah Borchardt. Good luck trading.